Ed Key, thank you so much for coming to Titans of Nuclear today to talk.
Thanks for inviting me.
Yeah, so you're the CEO of Nuclear Economics Consulting Group, which is a consulting firm, and you, from the name, obviously focus mostly on the economics of nuclear.
Sure.
But you had a start in nuclear as an engineer.
Right.
So why don't you tell me about how you got started in the field?
Well, look, I went to the Naval Academy, and one of the career path options for us was nuclear power. So I saw Admiral Rickover and got accepted, and then went into nuclear power school and spent my Navy career in Newport News Shipbuilding and Dry Dock Company, building the power plants on the Carl Vinson, one of the then new aircraft carriers.
So you actually had a hand in building it in terms of the design? Or?
No, not design. Those are all designed by other people a long time ago, but building it. So physically in the shipyard, on the ship, and there's a sequence flow of acceptance and testing and inspections as you build it. So when it's all done, it's handed over to the Navy, and we've been there to make sure it's all done right and it all works, and a whole test program, much like a civilian plant would if it was new. But so I've been inside almost every bit of it, and done a lot of different jobs and everything, and that was it. That was my start. But while I was at nuclear power school, before I went to the ship, 3 Mile Island happened, right? 1979. Oh, wow. So I was sort of in nuclear power school, and this thing happens, and that sort of shut down the civilian industry for a long time.
Yeah.
Some of my compatriots, classmates, were in nuclear power, and some of them went into nuclear industry then, but there wasn't a lot to do. It wasn't growing the way it was supposed to. So I left the Navy, went to grad school, and then went into the non-nuclear energy development side, and did a lot of work in private power and finance and stuff. But didn't get back to nuclear until about 2007 or so, and I was doing consulting work, and it's almost been all nuclear since then.
And so going way back to the start, and then when you went to the Naval Academy, why did you go to the Naval Academy? Were your parents, your father in the Navy, and they sort of...
Look, it's a easier story than that. I grew up in Texas, so I'm not really from the water, right? But I thought about the service academies, thought about the Air Force Academy. Ended up going to the Naval Academy because it seemed, like it was a good thing to do. Majored in engineering there, but they didn't have a nuclear engineering major then. It was a control systems kind of thing. But was
engineering just fascinating to you? Were you good at math and science already?
Oh yeah, really good. I mean, I'm sorry to say that, but it was a pretty rigorous program there, and I learned a lot about a lot of things, and sort of multidisciplinary. Control systems has a lot of stuff in, heat transfer and mechanical and electrical and electronic and everything else. So pretty good general background. But the nuclear stuff was all extremely focused on that plant, that design, the Navy pressurized water reactor world, theory and practice. I don't know if you know the Admiral Rickover sort of ethos in this whole business is you have to understand everything from a very fundamental baseline. So when things happen, you're not just acting from rote, you're actually understanding what's happening and why, and you understand it in a very deep way. So a lot of theory about nuclear power and how fission works and how the plant works, and so you can respond. So it was a very good start. But unfortunately, the Navy didn't really look very promising at that point either, so I left.
Why not?
Well, look, it was a peacetime Navy, and this had been like the early '80s, right? There wasn't much going on in the Navy. Aircraft carriers were nuclear powered, and we had these cruisers that were nuclear powered. So the career path for me would have been to ultimately be the commanding officer of a nuclear powered cruiser. Well, they phased those out. They scrapped them all. I don't know if you know that, but
no,
they cut them all up.
Why they scrap them?
Well, the aircraft carrier is huge. Thousands of people on board, and there's enough people and enough staffing to operate and maintain the nuclear power plants pretty well. The cruisers are a lot smaller, and the cost and the difficulty of maintaining a 2-reactor cruiser plant compared to a gas turbine cruiser plant, which is like, you push a button and it's like 3 guys. It was an economic decision ultimately.
Interesting. And why it had 2 reactors on the cruiser?
Yeah.
Why not just 1? Why did it have to have 2 if it's small?
Well, the submarines have 1 reactor,
Mm-hmm.
but that creates some issues. If one of the reactors goes down suddenly, you're like dead in the water. And for submarines, you have to deal with that. But you typically want to have enough, have a backup, right? So
Mm-hmm.
when you're going places and there's a problem and 1 reactor goes down or whatever, you're not dead in the water. So it's a design issue. It's a war fighting machine. It's not a
right.
You could have made them simpler and cheaper, but then if they don't work, well, that's not gonna be good for the outcome.
Yeah. And when you say that it was an economics decision, was it about you were talking about the number of people operating it, but was it also about the cost of fuel at the time?
The fuel cost, there still are arguments that you could basically save money on fuel, and when the price of oil and the distillate they use to run those gas turbines goes up, there's always a discussion of moving back to nuclear cruisers again, nuclear destroyers. It's more about the people and the staffing and just the difficulty of keeping those reactors running with a lot of people. Mm-hmm. I mean, it's a big quantum of people on the ship doing just the nuclear power operations and watchstanding and maintenance and all that stuff, compared to the gas turbines, which you've got just a handful of people, right? And you push a button, start them up, and you go, right? So they're very simple, they're very easy. Mm-hmm. Fuel cost was probably an issue, but not a very big one. And we built this whole class, the California class, all these big cruisers that were fairly new. And the Navy just said, well, we're going to scrap them all.
Because of the issue of having more people needed on board.
Look, I wasn't part of that decision process, but my understanding is it just was too hard. And it was too hard to keep the staffing up, and recruiting enough people to have all those folks on those cruisers was a hard thing to do. So for me, when that happened, my only career path was then going to be like chief engineer on a carrier and then something else. There was never any nuclear powered ship to command anymore because aircraft carriers are commanded by flyers, right? Mm. So the XO and the CO of a aircraft carrier are pilots that have gone through nuclear power school pretty late in their career, because you have to be nuclear qualified, but you also have to be a pilot. So that is just something. I mean, it's not possible to be a nuclear power guy who goes to flight school late in your career. It doesn't work that way.
Yeah. It's one-sided.
So the whole pyramid of where you go and everything got much steeper and more difficult. So
yeah, and then one more question, sort of on the economics. Why do you need so many people to run a nuclear power plant compared to others?
Let's talk about the Navy. The Navy approach is to have people rather than machines, right? So you can imagine having a lot of automation, a lot of computer-driven controls. The Navy approach is and has been to have trained watchstanders who are doing a lot of those things because it's more reliable. It's more, it's got a better long-term response. Machines can break, machines can go bad. The Navy really, surface Navy, nuclear Navy, has never had really an accident at all. We don't want to have one. You want to make sure these things are going. And you want to make sure you do it with people who are trained and proficient. It's not a lot different than a civilian nuclear power plant, which has a lot of people. I mean, if you look at a combined cycle gas turbine plant compared to a large pressurized water reactor, it's maybe 500 or more people working at the PWR. There's maybe 50 or less at the CCUT. It's just a different technology, requires a lot of different things and higher skilled. It's just the basic way that thing works.
Yeah.
If you could imagine a reactor that didn't need any people to operate it, that might be good, but I haven't seen one quite yet.
Yeah, I'm going to pick your brain about that. So would you be on board then with nearly full automation of nuclear power?
Maybe. I mean, I'm really not in the advanced reactor business, but there are people who are proposing some of these reactor designs that are, don't need operators, don't need maintenance. You just start them up and run them for 30 years and then shut them down and refuel them. The concept sort of works, but we've grown up the nuclear power industry with having trained operators, and the regulation, the safety aspects are based on trained operators. It's a pretty big shift.
So you think there'd have to be a lot of new regulations then, or at least amended regulations?
I don't know if new regulations might not be the right answer. The right answer may be that a nuclear safety regulator like the NRC or one in another country would have to basically agree that having less staffing would not have safety implications. Mm-hmm. And that's something that could happen if the applicant proved that by saying, here's how this would work, here's what might happen if this happens. And the path to nuclear licensing is basically a path to success. You've got to prove all these things. It may cost a lot to prove them, but until you prove them, you won't get your license. It's not like the NRC is going to say no. They're going to say, well, okay, what about this? Okay, here's how we're going to either fix that problem that you've identified, or we're going to prove to you that our way is okay. So it can take a long time and a lot of money. And the NRC is looking at some of those things now, but a fully automated nuclear plant, I don't know of anyone out there who's doing that right now.
Yeah. And I wonder if it would pay off economically, because I would think that it would just add to the already high capital cost of new nuclear. That doesn't seem to pay off easily. Well,
maybe, but I have to say that the if you look at the cost of nuclear power, if you look at the what I'll call cash generating costs, right? The three things that are there are ongoing CapEx, so you got to fix stuff and repair it. Mm-hmm. They're fuel, and then there's what we call O&M, which is mostly people. And O&M is by far the largest part of that.
Which is operating and maintenance?
Yeah, operating and maintenance. It's mostly people. So if you got rid of the people, you could have a lot lower generating costs, and that may be one way for a new reactor design to be more, have lower generating costs and be more economically efficient. But how that works, I mean, if you look at the NuScale concept, right, you've got 12 reactors in effect hanging in the pool, but you may not have 12 operators. So that could be a savings in staffing and O&M right there. Because every operator you have to have 3 or 4 of them, because you've got shift work 24 hours a day.
Right.
You've got one out on training, and so this huge cadre of operators who have to be there just because there's got to be one guy in front of the reactor all the time. And so it really adds up. If you don't have to have one, if you can have 2 or 3 or something for 12 reactors, that could be a lot less expensive.
Yeah. And I wonder, too, sort of the implications that it could have, similar to what you were talking about in your story, of whether you were going to stay with the Navy or go somewhere else, of where's my future?
Right.
If we do have automation, it'll be interesting to see, the size of the next generation of nuclear engineers and people that are actually studying nuclear, because where would they go? Besides, NRC or... Well,
there's been huge waves of that, and a lot of the people who go into the Navy program at all levels end up being in the civilian nuclear program. So it's a huge feeder. And if there isn't a civilian nuclear program that needs people, then maybe people won't go into the Navy program, which means the Navy now has staffing issues, or have to recruit more heavily to get their operators and their people. There's that. But there has been huge swings in the number of people in the nuclear engineering programs. I mean, over the past maybe 5 or more years, there's been a huge upswing in nuclear engineering, and there may not be a lot of places for those guys to go. There's a lot of good talent out there, but some question marks about what they do next. Go to conferences.
Which is never fun for an undergraduate or graduate to think about.
And you have these existing plants. I mean, the U.S. fleet is the largest in the world, but we have these plants that are closing down early for economic reasons now. And each time one of those closes, there are hundreds of people that now either have to go to a different plant somewhere else, or they have to leave the industry. And it's a worry if you're just coming out of college.
Yeah. I have a question on that, but I want to get back to it later when we talk more about your work.
Sure.
And continue on with your story. So you decide it doesn't work to go from studying nuclear and being involved in building nuclear to being a pilot.
Right.
So instead you decide, did you say to go to graduate school?
So when you leave the Naval Academy, you had, at least in my time, you had a 5-year commitment. I had to be a naval officer and do something for 5 years. And that something was nuclear power and building this carrier. And at some point there was an opportunity to leave or to stay around. And the Navy processes, they say, okay, your next job is going to be this. You say, well, I don't want to do that. Well, how about this? And how about this? And so what I wanted to do after the aircraft carrier construction tour, which is pretty grueling, but in effect, I was a surface, a ship driver. But I never got to drive a ship.
Yeah.
So I wanted to go drive ships and shoot guns and navigate. And every single job they offered me was an engineering job on a non-nuclear ship. And the last one was like doing a shipyard refit of a weapon system. It just was, if they had sent me to a ship where I could be a deck officer and drive ships and shoot guns and be a navigator or something, I would have probably done it. But I probably might have left later anyhow. But at that point, so I applied to grad school, business schools, got into a bunch of them, ended up going to Harvard Business School. And in fact, I was on the carrier in the Indian Ocean, and I flew back from Diego Garcia like the week I started classes in Cambridge. So
wow.
pretty big culture shift. And waiting for me in the Harvard Business School post office was a letter from Admiral Rickover saying, your qualification as chief engineer on Nimitz class carriers has been terminated because you left the Navy. So it's kind of a sad thing. But
yeah, it's a lot to handle in one day.
well, it was a few days, but it was a pretty abrupt transition from.
Yeah. Is that common for people to leave the Navy, or were you really sort of?
Oh, it is pretty common. I mean, it's a 5-year commitment. In fact, there were 2 people in my class who were. I guess there was one person who was in my class at Harvard. Another person was going to go to Harvard, went to Stanford instead, also from my class at the Naval Academy. So a lot of us were out there. And others stayed around longer, but it's
follow your passions.
Yeah.
Your passion was Harvard Business School?
Well, it was doing something else besides Navy, and that was a great transition to go into something else. And I ended up going back in the energy business, but it was in non-nuclear. It was in project development. And, I don't know if you know what a QF is, qualifying facility, small power plants. The Public Utility Regulatory Policies Act of 1978 created these new entities, basically private power companies. So I joined a company that was developing those, essentially private companies developing plants that sold power to utilities instead of the utilities building them.
Oh, you know what? I had one of these plants in my college university.
Which one?
And I forget what it was called, but it was in Gainesville, Florida.
Oh, okay.
And they burned woody biomass and sold it to the utility, but then the utility shut them down. I think that they had that. I'm pretty sure that
universities are a really great application because to be a qualifying facility, you needed to have a cogeneration facility, right? So you had to have heat output and electricity output. And so a university has a big need for hot water or steam for heating. Maybe not in Gainesville. I use steam to drive chillers to drive cooling. But a lot of them were put into schools. That was a great application.
Yeah, so you got to work, you said, for a firm that...
Yeah, I joined a startup firm called Catalyst Energy, and our job was basically making money developing those kinds of qualifying facilities. And later on, independent power projects, which were another offshoot, but private company who owned power plants, who sold power to utilities and made money doing it.
And so were you working as an engineer at the time, designing the facilities, or more using your business degree?
It was more on the business side, the finance side, the project development analysis and investment analysis kind of thing.
And was it something in the Navy that made you want to go and pursue business? Because it seemed like you really wanted to stay with nuclear, at least if you were to stay in the Navy, and then you jumped to outside of engineering into the business realm?
Well, I really haven't done much engineering since I left school. I mean, the Navy thing is about engineering, but it's more hands-on. The kind of engineering I did in college, I really haven't done, sort of control systems and that kind of stuff. But, that's the way life goes, I guess. But, I think staying in the energy industry was pretty interesting for me, but nuclear seemed to be kind of not going anywhere in the 80s. Because 3 Mile Island had happened, no one was building anything new. There were a lot of problems. There were a lot of issues. This private power thing, though, was booming. We did a lot of work and we did a lot of things. And it worked out pretty well. I did that for a while. And then the company I was in had some... Look, what we did was we kept getting bigger and bigger projects, right? If you're a company and your financial results matter, at some point, the small QF projects weren't really material anymore. We started doing bigger and bigger and bigger projects.
Right.
And so we ended up buying a firm called Alamito, which was the coal-fired power plants at Arizona Public Service. And it was a big deal, made money. And suddenly we became a different kind of company. We became almost like a utility. And the stock price, which had been driven by growth, suddenly became driven by, earnings, and it dropped. And I left at about the peak of the stock price. I'd had, options and all that stuff. And then went to McKinsey. I'd interviewed at McKinsey at business school, went back there, spent a few years in their energy practice doing all kinds of things, but including some nuclear projects. But stayed in the energy industry, based in Washington. And the way
DC or?
Yeah, Washington, D.C. The way McKinsey works is they have you have an office where you live, and most offices are based around lifestyle, right? Your clients are all, New York, all your clients are in New York, but the energy practice is sort of a worldwide practice, helping other offices run their energy clients. So I was traveling all over the world all the time. Pretty grueling time, but
seems fun at first, and then you start traveling.
Traveling is always hard, but when you're working, and the other thing, the McKinsey work style is spending 5 days a week or 4 days a week with your client at their site. So if your client was in Houston or Tokyo or somewhere, I had to be in Houston or Tokyo or somewhere, and that was pretty grueling when you're based in Washington. So I did that for a while. Then I left and went to this thing called economic consulting. Have you heard that term? No?
Not until looking you up.
Economic consulting, it's kind of a funny term, but it means it's firms that do economic analysis, mostly with respect to expert witness testimony and litigation, right? So you have a lawsuit and you have experts that come in about, you did this bad thing and I was damaged. Well, how much is that damages? And so there's this big model you develop on the one side about the damage that happened because of this bad thing the other guy did. The other guy has his experts who look at your model, and you fight out and testify at court, and it's like anyway, it's what we do. So I did that at Charles River Associates. Then I went to another firm called Putnam Hayes and Bartlett, which was acquired by PA Consulting. Then I went back to CRA. Then I went to Nera Economic Consulting. These firms people are moving around all the time. I know a lot of them. But so the work there since I left McKinsey has been about half litigation, where I'm an expert witness in litigation, and about half advisory work, which is not really like management consulting where you go in and spend all the time with the client. It's more like you come in at a pretty high level and help them with expert analysis of some issue. So it's almost like the litigation stuff. Benefit is pretty high value work, so you get high billing rates. You can kind of control where you work and what you do and your lifestyle. It fit pretty well. So that was I've been doing that ever since then, so it's been pretty good. And Nuclear Economics Consulting Group does the same sort of thing. Less litigation now, maybe less than half than when I was at the other firms, but still some litigation cases, and expert advice is the rest of it.
And when you were at these other litigation firms, were most of the projects still centered around energy, or this is like a grab all bag of topics?
I have been focused on energy the whole time. There was a time in the 90s when the work was mostly about litigation around power contracts, because I'd done work in that area. It was also around advisory work about electricity markets that were just starting to figure those out and design them and implement them. And I was lucky enough to be in a firm, Putnam, Hayes and Bartlett, where Bill Hogan and some other folks were who invented these markets. And so, I got involved in designing them and thinking about them. And I actually I opened an office for Putnam, Hayes and Bartlett in Australia and ran the group of people there who helped implement the Australian national market and then help in privatizing some of the assets of the government utilities. So I've got this deep, like Rickover's idea, you want to have deep understanding. I have a deep understanding of these electricity markets because I helped work on designing them and implementing them and auditing them and analyzing them for a long time. And then moved back to nuclear, largely because of litigation cases. There were a couple of big litigation cases that have come along in nuclear. I don't know if you know, but when you have a problem in nuclear, big amount of money, so a problem can be a very big claim.
Right.
And so there are a couple of those big cases that came along. Some of the late, do you know what a rate case is, a prudency review case?
No.
So we built all these nuclear power plants in the U.S., and a lot of them went over budget and they were delayed, right?
Right.
And so the basic deal was, if I'm a utility and I build a nuclear power plant, I get a return on the money I invested in it. That's how the regulated utility business works. At some point, though, the economic regulator says, well, hold on a minute. You said this was going to be $4 billion and it's going to be $6 billion now. We want the shareholders to take some of that. And so they had these things called rate cases to determine how much of the actual cost would be allowed into regulated rate base. It had to do with, were the things you did prudent, or did you cause this problem, this delay, this cost overrun? Could you have done it better? And often the prudency issues were pretty convoluted, but basically it was a way for the economic regulator to sort of shift some of the pain from ratepayers to the shareholders who maybe caused it. And that's a pretty contentious thing to say, but those are all over now. I got to be involved in a couple of those. And then there are
for those, who's the economic regulator for the nuclear sector?
Well, in the U.S., it's each state. Okay, we have a state-based economic regulator system here. If there are regulated utilities, and there were in every state in that time, the state utility commission, maybe DC's utility commission even, determines what rates you charge. So it's the safety regulator is one. The NRC does everything, but every state is a different economic utility commission regulator. And so you might have multiple utilities in different states owning one power plant, but typically it's one state. For instance, the Vogtle plant, right? The Georgia Public Service Commission is overseeing that, and they will ultimately decide how much of the cost of that goes into rates, but that's the economic regulator for that plant in Georgia, and it'll be a different regulator for every state.
I see. So that's really interesting that the state has pretty much control over the final rate, and the way that they do that is that they make the shareholders and the utility pay back certain portions of going over budget. Is that?
Well, look, in the period up to maybe the 1980, let's say, our electricity system was growing. Demand was growing. You needed more capacity. Utilities are building more capacity. Power plants got bigger. They got more efficient. They got cheaper. And so typically rates were going down all that time, right? Even though demand was going up.
Across the sources?
Across the whole country, let's say, is average. So rates are going down. The utilities are doing a pretty good job of building whatever they were building, and whether it was hydro or coal or whatever. And plants got bigger and more efficient, so costs went down. There wasn't really a problem with the economic regulator saying, well, rates are going up. Mm-hmm. At some point in the late 70s, early 80s, the OPEC oil crisis happened. Oil prices went up. Gas prices were linked to that. And suddenly we had rates going up for the first time. Plus, we had this huge demand projection, growth in demand over time, right? And we had planned all these nuclear power plants to meet that demand, and we were building them. Suddenly, with the oil shock, the whole economy cooled off. Demand didn't grow very much. We had lots of excess capacity. And at the same time, we had the 3 Mile Island accident happening in 79. We had retrofits, we had higher costs, we had delays. So you had expensive nuclear plants that maybe you didn't need anymore because the demand wasn't growing. Mm-hmm. And suddenly rates were going up. So the regulators got a lot more concerned.
Yeah. But to me, it sounds, it's an interesting term, excess capacity, because I would think that if you had a plan to build a nuclear plant, but right. Now your demand in the area that you projected the plant to serve isn't as high, why don't you just still build the plant but sell the power?
Look, you probably would. The economic model for the utility industry was based on a regulated utility area, monopoly area. So you had a utility, it served all the customers in a whole state maybe, right? And so they had to build enough capacity to meet the peak demand. And if they had a chance to sell some of their electricity to other utilities around the area, they could do that. And they always did that. Mm-hmm. The problem is you've got this capacity problem, and then you've got electricity trading in the shorter term. And the capacity ownership, is what these guys were worried about, because that's where the big dollars were in the early period, right? You had to recover your investment. Once the thing is fully depreciated and you're only recovering the costs of operation, the CapEx, ongoing CapEx, fuel, and O&M, it's a much lower rate. In fact, if you look at, there's a great example, in San Antonio, the city utility there owns half of the South Texas project. And the South Texas project, the first 2 units were probably one of the most expensive and most delayed units in the country. And so their rates there at the time, in the early 80s was really, really high. But they were looking at doing another 2 units there 10 years ago. And I was advising the city and the utility. We had these business leaders in, had been there forever. And they said, well, look, the first one couldn't have gone much worse. Mm-hmm. And yet today, 20 years later, we've got the lowest municipal rates in the country because of these nuclear plants that have been all paid for.
Right.
So build 2 more, even if they go badly, my children and grandchildren will have low, cheap electricity forever. And so they said yes. So it's a temporal thing, right? You have to pay for it fairly fast after it's built, but then it operates for 60 or 80 years maybe. The value of that power is pretty high, and it's a long-term value.
Right.
And so it's a trade-off the regulators got to make. They're looking at not only rates today, but they're looking at what are my ratepayers, the citizens of my state, for example, are going to be seeing over 100 years maybe.
So they really do look over 100 years and make decisions based on that, or they say they do, and then they...
No, they do in that model. Mm-hmm. Now, the problem is we shifted away from that model in some parts of the country. The PJM, ISO New England, ISO New York, Texas, and California have these markets now, right? Where the markets don't look out more than a few years.
Why did they shift to that model?
Look, this is my whole business for a long time. The idea was that these electricity markets could be more efficient and more effective than the old regulated utility model, right? So you shifted away from having utilities that were sort of a patchwork quilt. Each one of them did their own dispatch. They maybe traded a little bit between themselves. So now you put all those utilities into one big area, one big market, PJM market, for example. Joint dispatch, so all the plants in the system get dispatched at one time by one process, as opposed to having each utility, because some utility may decide to dispatch a more expensive plant here when their neighbor has lower,
cheaper one
you could trade. So benefits of trade, benefits of coordination, and the belief was that the prices coming out of those markets, the spot prices out of those markets, would provide an incentive for the right kind of generation expansion projects that were based on the market needs. So prices are high, someone builds. Prices are low, no one builds. And so it was thought to be a way to do that. Hasn't worked out nearly that well, though. And we're still basically running these markets in the U.S. On assets that were built before there were markets, right? Most of the power plants, all the nuclear plants, but most of the coal plants, even a lot of the gas plants, hydro plants, they were all built over the century before under this regulated approach. Now they're in a market, and the market's doing what it's doing, but we're not getting enough new stuff built. And the new stuff we build may not be stuff focused on the long-term process. And I guess the other thing about markets that's a problem that we didn't think about when we were doing them is that the wholesale market spot price is an important, in fact, it's the primary focus of these markets. They're going to get the lowest possible short-term commodity spot market price. But that's only a part of the price you pay as a consumer, right? You have to pay for all the transmission, the distribution, all kinds of uplift charges and everything else. It's possible to have low spot prices, but have higher total system cost than a regulated utility. And it's been proven a couple of times around. If you look at the data, there are a couple of studies done of 20 years of deregulation. How did the markets compare to the regulated areas? Not a lot of difference. So, but yeah, it's an interesting problem. And the reasons why we did markets.
I was just about to ask, why do you switch from regulated to markets?
Well, look, it was thought to be a better way to do things. It was thought to be a way to make these electricity systems move into a market-based world. The UK did it first. Back in 1990, they did the pool market there. Then it came here. Then it came to Australia. It came to New Zealand. Came to Singapore, and it kind of stopped. And it stopped in the US, right? We have all these markets, but only maybe half the country's in a market, half isn't. And I think there are people who argue both sides of the story. People argue that the markets aren't working. And in fact, one of my things I'd say ought to be done is we ought to get rid of those markets, frankly, because there are unintended consequences when people are building mostly short-term assets like natural gas-fired power plants, because that's the only thing that could possibly make sense. Then 10 years from now, we're going to have higher costs and more risky costs and dirtier system than if we built on a longer term looking forward basis, the way regulators can and have thought about it. A nuclear power plant, it's a 100-year kind of deal. You know, the longest you might have for a gas-fired power plant's maybe 25 years or something. So it's a whole different outlook. And the markets only focus on today, the next hour, the next half an hour. Some of them have like a 3-year forward-looking capacity market bolted on, but they're not doing planning out beyond that the way a regulator would have done.
Right. And just like before we get too much into the nitty-gritty, like to just really define the difference between the regulated system and the market system. So it's like the regulated system is like you have a regulator that essentially controls the price of the energy from whatever sources. There's like a cap on the price from all of them that says, okay, the customer can't pay more than this. But then with the market system, it's just the different sources competing with each other to get lower costs. And so the energy sources with the lowest costs get more of the, I guess, share.
Yeah, look, let's just your characterization of the regulated process may be literally correct, because some regulators are focused more on the end price than they are on the process. The most of them have, though, a more deep and thoughtful process. They're saying we have this set of customers, and they have a certain demand level, and that demand's expected to grow over time. and we need to build power plants and have a portfolio of power plants to meet that need. Mm-hmm. And we have transmission lines to move power around the system to meet that need. And we want to do all of that in a way that gives us the lowest long-term total system cost. So the rates will be low for a long time. Mm-hmm. And so you might build nuclear in there, you might build hydro in there, you might build this, some mix of assets. The objective function is the lowest total system cost for the long term. Okay. So the idea of rate cases and splitting up overages, that's kind of a special case that only comes about when things go really bad. So that typically you build the utility regulator doesn't just look at prices, they look at what are you going to build. Right. We want to build a gas plant. Well, why? Justify that to us and we'll let you build it and you get a return on it. Mm-hmm. So they're really planning the system and they're deciding what the utility can and can't build. If something goes really wrong, though, they have these prudence reviews. So that happened. We've got new processes in place now in some states that go around that. So they're looking at long-term total system costs. They're looking at reliability and resilience and maybe even jobs in their state, and they're looking at, clean air. They're looking at all kinds of things. So the utility regulator in their planning function is looking at essentially the public good of the ratepayers in each utility area. And that's a pretty big deal.
Oh, yeah.
The markets are focused on one little narrow piece of that, which is the generating plants that are available to run in the next 5 minutes or the next hour. Mm-hmm. How do we pick which one we're going to run and which one we don't run?
I see.
That's their main and almost total focus. Mm-hmm. Sometimes they're looking at a day ahead. Sometimes they're looking at a year ahead. Maybe there's a capacity market bolted on. But they're basically trying to get the lowest possible joint dispatch. And you have to have a plant operating to be in that world. So they're not looking out at what gets built and what doesn't get built. They're looking at just how to dispatch, turn on and turn off the units that are going to run in the next trading period.
Could it not be combined? So say like the regulator has this group that just does the market research?
Well, look, the utilities do exactly the same thing. Mm-hmm. They have a guy called the dispatcher whose whole job is minimizing the cost of power in every coming period by turning on the cheapest ones and not turning on the expensive ones. They do exactly the same thing. They've always done it. Mm-hmm. The markets do it maybe a bit differently, but fundamentally not differently. And so if you're a utility and if you dispatch a lot of expensive stuff in the wrong way, you're going to have higher operating costs, and maybe the regulator is going to yell at you about that. But they're also thinking about everything else. And you might have a reason, frankly, for dispatching this plant today because this other plant's going to be going down for maintenance 2 days from now. You don't want to shut this one down. You want to do this. You want to have it available for peaking. It's a complicated process. The markets do it pretty well, but that's all they do.
Right.
They do it over a broader area. And the people who are participating in the markets are, for the most part, individual, independent, privately owned companies. Mm-hmm. So the problem is if you're a generator in PJM and you're selling to PJM, you get the spot price at your location, but you don't have any guarantee of return on your investment. You have no guarantee you're going to cover your costs of generating. All you get is the spot price. So you got to look at that spot price and decide, almost on a day-to-day basis, what do I do? And these nuclear plants that are closing down are saying, my generating costs are pretty low, but the market prices on average are even lower. Mm-hmm. So what can I do? I'm going to lose money until I shut down.
Right.
And so that's kind of the way it gets there.
And you said that parts of the U.S. are in markets and parts aren't. Mm-hmm. So how did you, I don't know if this was directly part of your work, but how did you guys decide, which areas would go to a market model and which wouldn't?
Oh, no, we didn't decide. We worked, myself and my colleagues worked for various of these markets when they were designing and developing. But so New York was a power pool, had a bunch of utilities in a power pool. They became a market. New England had their own power pool. They became a market. PJM, Pennsylvania, New Jersey, and Maryland had a power pool, and they became a market.
When you say power pool, that's a bunch of different sources
It
near each
was the old regulated companies, utilities, prior to markets, who jointly banded together to do joint dispatch.
Got it.
Maybe do joint expansion planning and transmission planning. So it was already kind of a...
It was like forming almost.
It was a precursor, and it was easier to make markets there. California started a market totally from scratch, as did Texas. And so, it was driven by the state lawmakers, and the regional ones happened because of multiple states, New York and New England. New York had one state, but New England and PJM, since they moved slowly toward this at the urging of FERC, Federal Energy Regulatory Commission. FERC wanted markets. They thought that was the right way to go. They pushed hard to have everyone to have markets, to have open access and transmission and everything else. A lot of states said no. I mean, the Southeast is all still regulated for the most part. The West is still mostly regulated. There's some states in the middle, I guess MISO, the other market in the middle there, Mid-Atlantic Independent System Operator markets, and sort of another one in there that came about over time. It happened incrementally and for various reasons, so it wasn't something any of us picked.
Or very planned, just sort of came about.
Yeah.
And so, well, actually, before I ask this question, to ask a question about, you were mentioning that because of this market system, you have like a lot more short-term plants, like natural gas plants that only operate for 35 years or so, popping up faster than or over nuclear plants, which are obviously larger investments. So like when you guys look at the economic analysis of, these strategies, do you look in terms of like what's like the lost assets, like all those natural gas plants that are eventually going to have to be taken down, or is that not part of it?
Yeah, no, look, I don't look at that stuff that much. I think about it a lot because it's kind of the world we're in. But, what happens is if you're in the power plant development business, right, you're going to find an opportunity to build a power plant that makes money. And that does so in a way that's the least risky for you, right? It's about money. And so if you're looking at building a new power plant anywhere, natural gas plants are kind of the go-to plant right now in the U.S. because natural gas is really cheap, pretty easy to build them, takes pretty known and short time to build a plant. So your capital investment is not as big, your capital risk is not as big, and you can operate them in a way that if gas prices go up, you just get dispatched lower and maybe, unlike the nuclear plant where most of their costs are fixed, right? The fuel cost of one of these gas plants is not fixed. If you stop operating for an hour, you don't burn any gas.
Yeah.
Turn off for a week, you don't burn any gas. And that's maybe 70% of the total cost. And that's a big deal. So you can think of a project development plan that makes money for a developer. Natural gas plants kind of do that, but even not so many of those are being done. But for a nuclear plant, it's a much longer, more difficult process, and it's a huge capital risk involved. And so the market, no one's ever built a new nuclear power plant in a market, none, ever. The UK, who was the first market for electricity in place, decided they want new nuclear. Their old plants are about to close down. They need nuclear to meet their binding carbon targets. And so they spent 5 or 6 years developing a way to do that, to give the government the tools they needed to provide incentives to non-government investors in a new nuclear plant in the UK. And they did that for Hinkley Point C, the only one that's come about, by giving them a lot of things, but the biggest thing was a 35-year, what's called a contract for differences. It's a power contract at very high prices. That plant's being built today. It's being built not by a private company, but by a combination of a French EDF, the French nuclear utility, and CGN, a Chinese nuclear utility. So it's sort of these government entities from outside the UK who are joining together to build a new, we call a merchant nuclear plant in the UK with a big power contract. And that's sort of working for them. But when the next ones came along, Horizon and Nugen, do you know what So Horizon were two other new nuclear plants, one by Hitachi, one by Toshiba Westinghouse. They were looking at the Hinkley Point C deal and thinking, if I can get that deal, I can definitely build my power plant. Mm-hmm. Well, the government didn't want to quite give them the same deal because politically it become very bad. The high prices offered to Hinkley Point C were seen as something.
From the 35-year contract.
The long-term high-price CFD probably wasn't going to be available. They wanted a lower price and different terms. Mm-hmm. In the end, the new-gen Westinghouse Toshiba one is dead. Hitachi, GE pulled out of theirs at Horizon after spending a couple of $1 billion, I think. So just the deal didn't work. So now the UK is thinking about what do we do next? And they just released a consultation paper last week about going to, guess what? The old regulated asset-based model. So they're going back. They didn't have that in the UK before. They were all government utility. They went government utility to markets, privatization of markets. Now they're looking at going to regulated utilities for nuclear, maybe other things, much like the US system that's still in place in about half the country. So they're currently thinking about how to do that. There's some good lessons from the US for them, but it could work. It could be a way for someone to build new nuclear under a regulatory process that gives them some kind of returns and some kind of a more reasonable economic trade-off.
Yeah. I wonder, what do you think of, like, what if we just had designated areas in every country that are like, this is just nuclear and it's just a regulated system, and then we'll have other areas that are market-based. So
I think you come to a very good idea, and that is that, and this is, I've come to believe this very fully, that nuclear, because of its fundamental economics, is got to be either a government or a regulated asset. And the thing you just described could describe China. I mean, China's saying, we're going to have a nuclear power program, and we're going to do it with these government companies, and we're going to build them, and the government utilities are going to be dedicated buyers, and they're building like crazy. And because of the way their system works, they're able to build a lot of plants. They're building them on time, maybe even on budget, although it's kind of hard to know exactly what it costs to build a new nuclear plant in China because of the information gap, but they're learning how to do it. And so when you build 10 of these things in a row with the same companies and the same design, that's the way to be successful in nuclear. Building one at a time, first of a kind, is always going to be a problem. But we can't do that here because they're each one-off little one-on-one decisions.
Right.
So you're right. If the U.S. said we're going to have nuclear power, like the way the UK is doing it differently. But if the U.S. government said we want nuclear power to be part of our future generation mix, and we don't think the private companies are going to do it, so we're going to have a new government nuclear utility, which is going to build, and we're going to sell power however we sell it. But you could basically supply. The federal government is one of the largest power users in this country. So you could say, we're going to supply all the federal power, including the Defense Department, all these bases and all these, everything is going to come from nuclear, and we're going to have a government utility with nuclear plants. And I proposed years ago that they ought to do that, and you ought to buy these plants that are going out of business because their value is less than zero. Just take them over for nothing.
Yeah.
Or something, not very much, and start your fleet that way. But getting Congress to that point is a very hard thing.
Yeah.
And so what happened in the U.S., instead of the federal government doing something like that, states have decided we want nuclear in our state, and we're doing things to save nuclear from closing down. Do you know about these ZEC programs and so on?
Tell me about them. ZEC, you said?
So there have been a number of existing nuclear plants who closed down early because, as I said before, they're in a market, they're making less money than it costs to operate because power prices are so low natural gas prices, high renewable penetration, low demand growth, you name it. There are a lot of reasons why wholesale electricity prices are quite low. And so they couldn't find a way to make money, so they closed down. Kewanee in Wisconsin closed, Vermont Yankee closed, and there were 3 plants in New York State that were going to close, Ginna, Fitzpatrick, and 9 Mile Point. And the state of New York said, well, hold on a minute. We don't want those to close. We need the clean air. We kind of like having jobs in upstate New York. So they came up with this thing called the Zero Emissions Credit Plan, the ZEC plan, okay? And they put it into place in New York, and it gives those 3 plants in upstate New York extra money nominally for the clean air they produce, although it's as much about economic impact and jobs as it is about clean air. That keeps them in operation, so they're staying around.
So it's like having a bonus because
it's giving them more money to make
carbon.
to make up the gap between these wholesale market prices and what they need to operate. So now they're making, I guess, a profit. I mean, they're all private companies, so it's hard to know what they do and don't do. But they are talking to the New York State Public Service Commission about economics, and they're on.
Well, so why doesn't it go sort of the other way, and they make the plants that do emit carbon pay some of that back?
Oh, you could do. Okay, and that's, if you think about how do you solve the problem of nuclear not being competitive? There are several ways to do it. One is to give them more revenue, right? To take account of the things they produce that don't get valued, like clean air, like extra jobs, like system resilience and reliability. If you don't get valued for those things and don't get paid for them, you might close. All you're getting is commodity electricity prices. So paying them more money is one way. And I'll go through the list. New York did it. Illinois did it. New Jersey just did it. Connecticut did something similar. Now Ohio has just passed a bill to save the Perry and Davis-Besse plants. So you got 5 states who've done something on a state level to save these nuclear plants. Now, what else could you do? You could have a carbon tax, for example. Say, okay, because all these combustion-based plants, we've been burning stuff our whole time as a human species, right?
Right.
And we don't charge anything for all these combustion wastes that go out the stack, even if they're particulates and NOx and SOx and carbon dioxide, carbon monoxide, other things. We don't see it, we don't feel it, but it's a problem. If we charge for that stuff, like a carbon tax or some kind of really strong limit on how much they can emit, that would cause their cost of generating to go up, either because the fuel is more expensive because of the carbon tax or because you've got technology added on to capture the carbon or something. That would increase the wholesale market price and maybe make nuclear more valuable. If you look around the world, though, efforts to do that have been fairly small, not consistent, to build a nuclear plant or to keep on operating, you need to have some longer term view of revenue. And if what you're looking at is some potential of a carbon tax that may never happen, or a small carbon tax that won't be enough, or one that may go away when the next administration comes into play, that's not enough.
Yeah. And it's interesting because so like I worked in air permitting and would submit air permits, like basically would make the balance for different power plants for what they owed to the government for what they were emitting. And you would continuously see nuclear with, hardly any bill at all. And then the coal and the natural gas plants had huge bills. But the thing that was happening was that the plants were able to essentially buy people out to put forth false paper.
You were in California?
I wasn't.
Okay, because there was a time in California when if you want to build a new power plant, you went out and bought up every dry cleaner in the region, right?
Yes.
And you took their emission allowances that somehow had been grandfathered in and used those to build up. It's like
and so you have a lot of dirty politics around it. Yeah.
Exactly.
And so a carbon tax could seem nice, minus some of the things that you mentioned, but then there's also sort of the dirty politics around it too, that it makes it seem like maybe the best thing that we can do instead of focusing on actually the emissions part of the plant is focusing on what you were talking about earlier, not just building one nuclear plant, but building many and making a supply chain.
Well, you have to do that to make this nuclear industry work. The existing plants, though, are probably the cheapest way to get clean air ever. I mean, they're already built. Their operating costs are not that high. Compared to building a new gas plant, they're low. But they just can't make money in that little piece of the wholesale spot market. So a little bit of value, whether it's a ZEC payment in New York or Illinois or New Jersey, is enough to keep them around. And so we saved a bunch of plants that way. Other states haven't. Wisconsin didn't do anything, and they lost Kewanee. Vermont lost Vermont Yankee, didn't do anything. Massachusetts let Pilgrim die. I mean, they didn't do anything. Now we've got a few more. Diablo Canyon is going to close early, not on time, but they're not licensed at extending, which they could do. Some kind of a weird state deal about, I don't know, I guess they hate nuclear more than they like clean air. I don't know how exactly that worked out. Then Indian Point's going to close in New York. And that was a complicated mess. They had this long lawsuit about direct cooling from the Hudson River and Riverkeeper and all those lawsuits. They settled the lawsuits and they agreed to close only maybe less than 10 years after the 40-year license was up. There's still hope for Indian Point, maybe. There's still hope for Diablo Canyon, maybe.
Do you think that there's still hope for plants, even if they shut down, but they're not necessarily decommissioned?
No. I guess the reality is in the U.S., there is no process. Once you take an operating nuclear plant into what's called a possession-only license status, people can go away, you take the fuel out. No one's ever taken one of those back to full operation. Mm-hmm. You don't know how much it would cost, how long it would take. To go through a process of establishing an NRC rule about that would probably take 10 years and cost $1 billion. If you're losing money, who wants to go through that? Yeah. And it's a risk. But having a mothball option would be a great thing. The Canadians, I did some work in Canada on the Bruce plant. They had Bruce A was essentially wasn't needed because the demand wasn't there. They shut it down for 15 years. Mm-hmm. It was just sort of sitting there. They brought it all back. It's all operating now. So they're able to return a mothballed plant back to operation. We just don't have that option. Yeah. So one thing we could do is have that option. So some guy like Vermont Yankee could close. Instead of decommissioning, they remain in sort of, some kind of controlled status so they're ready to restart. Mm-hmm. What that is exactly is important because you don't want to have people costs while you're not operating.
Right.
And you can't use your decommissioning fund when you're doing that probably. So that's some of the issues there. But we don't have that. Once they close down, once you cross that line of a possession-only license, no one's ever come back. And you have to assume it's permanent in this country. They're gone.
Right.
The site might be usable someday, but that plant's gone.
It seems like to me, and maybe it's just me being hopeful, that it would almost be more worth it for someone to say, okay, I'm going to extend my license for this plant, even though I'm losing money on the plant right now because I can't compete with the market prices. But I'm going to keep it in the hope that in the next 10 years, the market changes. And eventually, even though my operating, all my costs are pretty fixed, the other markets will change enough that my price will become the cheapest and just take a loss for 10 years in order to gain that back over the next 40.
So I testified on behalf of Entergy in the Vermont Yankee lawsuits in Vermont. And the idea then was that Vermont Yankee might do that. They might get their license renewed and they might keep the option alive, keep the asset alive to have the option of making money at some point in the future. The problem is if you look at the long-term forecast for natural gas prices and demand growth, renewable penetration, they're all going the wrong way or they're staying steady. I mean, you look out to 2040 even, gas prices are still pretty low. Demand growth just hasn't come up much. Renewables are even more, so they drive the price even more negative. And so you have this world where it's not 10 years maybe, it's maybe longer. And you've got tens or maybe $100 million a year loss. Your shareholders aren't going to like that.
Yeah.
But you're right. Some companies have done that. In fact, the ones that closed early typically operated for maybe 5 years or more at a loss before they finally gave up, hoping it would come up. So good thought, but if you want to buy one of these plants.
Hey, once I get enough money.
lose $100 million a year for 10 years. That can add up to real money real fast. That's a problem.
I guess I'm hopeful. I don't know, working in Australia for a little bit, you might be more familiar with it, but Australia is starting to ban coal. And
I wouldn't go so far as to say starting to ban coal. They're starting to talk about what happens when coal's gone someday. Yeah. Most of their power comes from coal. It's really cheap. They're talking about nuclear now too, but really not. They have a law against nuclear, right? You know that?
They do,
and so there are several people I'm talking to now about how to get around that. But they have so much cheap coal, and in some parts of the Southeast, they have some gas that's not too expensive. So talking about banning coal is,
I would say, it's the start.
Overstated. Maybe? Talking about it's all they're doing. And
Well, maybe one day we'll talk about getting rid of natural gas and coal.
Well, if you want to have a zero emissions electricity system, which is what most people talk about by something, 2050 or whatever, you have to get rid of natural gas or else convert it to some kind of carbon capture that really works. Mm-hmm. You have to get rid of coal. You have to get rid of any oil or diesel out there. And that's a pretty big ask. And your point you made earlier about, well, if you're building natural gas plants now, you're going to have to get rid of them in a while.
Right.
And that's crazy. But, I think most people believe that we won't have, and most people who are building a natural gas plant today don't believe it's going to be gone in 10 years or 20 years or 30 years because we'll never have a zero emissions system. Mm. They don't believe.
Right.
And they have good reason not to believe. What have we done? We talk and nothing happens. The Clean Power Plan, do you remember the Clean Power Plan? All it would have done is caused a few coal plants to shut down, and that didn't even work.
Right.
It's just a mess. So, the government needs to do a lot more in a lot more rigorous way to get this problem solved. And and I guess every time an existing nuclear plant closes early and they lose maybe, I don't know, 20 or 40 or maybe even longer extra life. I mean, these guys are operating to 80 or more years now. Is going to be replaced by, in the short term, existing gas plants operating more. Mm-hmm. So you get more carbon, more this, more that. Your system gets riskier because now you're more exposed to more gas flow off the pipelines. The pipeline has a disruption. Your system gets hurt. Your wholesale spot price is more closely linked to the gas price, which hasn't moved around a lot, but could. So you have a dirtier, riskier system, maybe a less reliable system. And at some point, if you go to a zero carbon electricity, they're going to have to go away.
Right.
So you got to build another nuclear plant down the road. And, why not? You say the owners might not want to do this because they lose too much money, but the government could do this. The U.S. government could say, or the New York government, or the Illinois, New Jersey could say, we're going to give these guys a little more money because we're going to need them.
Right.
And if they close down, we're going to have more gas, and it's going to be even harder. So they had a very sensible approach. But the federal government has pretty much been hamstrung in this effort. I hate to say that, but they're doing a lot of research on advanced reactors and things like that, which is their purview at DOE, but not much has been done to address these existing plants or to get new ones built. I mean, getting a new plant built in this country, and it's never going to happen. Because if existing plants can't survive on cash generating costs, fully depreciated, no one's going to build a new one.
Right.
Of any kind.
Just going to give us a new problem. Yeah.
Advanced reactors are included in that, right? I mean, how are you going to build an advanced reactor that has a lower total cost, including investment, of these existing, light water reactors? Yeah. It's not going to happen.
I would say the advanced ones give you more of a problem. There's more unknowns with the newer.
Oh, yeah, there's technical risk on top of that. But, I mean, you have to do, and I see these guys, I talk to these guys all the time, and they're focused on capital costs. That's their main focus. How can we build this advanced reactor design at a lower cost per kilowatt than Vodal or Ocaludo 3 or something? They ought to be focusing on the operating costs and how much they cost to operate, fuel and O&M and CapEx. And how does that compare to wholesale market prices? And I've given a couple of talks to these guys on this, and that's like the next problem down the road, right?
Yeah. I mean, that sounds like a great solution to like actually focus on your long-term strategy of how to keep the plant running.
Well, the problem is it may not be, I mean, there are guys talking about having plants, as you started out the conversation, plants that really don't require operators, remote things and small battery kind of things. And those could happen.
Yeah.
But, for the most part, the US, Canada, most big industrialized countries have a very, very big demand for electricity. Mm-hmm. Big systems, big wires, big power plants. Having a little battery nuclear plant may be good if you're replacing, a diesel generator in remote Alaska. Could be a great application. But if you're putting them in PJM, it's not even a rounding error.
Right.
And so, why do it? If you're going to build nuclear, you got to have all this stuff and the site and the application. Might as well build a big one. That's why we got the big reactors in the first place. It's a big trouble to get one built. Might as well get a lot of electricity if we're going to do that.
Yeah.
Hence the gigawatt size plants, or several of them on one site. So
totally agree.
Yeah.
And just as we wrap up here, we've talked a lot about what the state of nuclear is, but what do you hope for the future of nuclear?
Look, I'm working inside and outside the U.S. Most of my stuff in the U.S. lately has been on these existing plants and how to save them. And I think I said 5 states have done something now, and that's really good. Some states haven't, and they may not do anything, and that's bad. But attention's been focused, and things have gotten done. Outside the U.S., focusing on how to manage. Well, if you look at the world nuclear market, there's sort of the Russians, the Chinese, maybe the French, maybe the Koreans, maybe the U.S., right? So if you're going to go buy a new power plant, the Chinese are looking pretty darn good. They're building a lot of them. They've got a design. How do you deal though with the overlay of nuclear power, safety and economics and geopolitical issues?
Right.
Do you really want to have a long-term 100-year relationship with the Chinese government or with the Russian government or maybe the French government, but that's another issue, or the American. I mean, and so dealing with all that, and we're doing work in some countries that are looking at new reactors now, and dealing with those problems on top of, the basic economics is hard. The Koreans look like they may want to exit the whole industry, which is really sad, given their 30-year march from nothing to being a powerhouse. And now they're maybe moving out of the industry, which is just really sad and scary. Mm-hmm. I'm hoping the new government will come into place in Korea and turn that around. But, they got pretty good at this by building the same plant over and over again in Korea. Now they're building them in the UAE. But they appear to be pulling back. So I don't know. The overlay of government policy and interaction and, private investments is a hard one.
It's just a hard one. But hopefully we can figure it out.
Well,
we have to.
Well, frankly, we'll close all of our plants down, and by 2050, a lot of them may be gone if something isn't done. Then we really need more, and at just a time we're sort of getting to zero emissions, all the nuclear plants closed, and I got to do something else. Mm. We may be getting the Chinese to come build a new fleet for us here. They'll be the only ones building.
Yeah.
Which is kind of sad, but
hopefully not. We'll try to prevent that.
How?
We'll share this podcast. We'll make everybody aware of nuclear.
The Chinese are really doing well. I mean, more power to them.
Yeah. Well, hopefully we learn from them.
Yeah.
I've learned a lot from you.
Thanks.
So, Ed Key, thank you so much.
Thank you.